All right, what's going on YouTube? Today, I just finished off a session making over $4,564 live trading with my Trade Smart Academy community. And of course, it's your boy Trade Smart, aka your favorite trader's mentor. And today, I want to go ahead and release the whole video of my live session so that you guys can take it and learn from it and see what it is that you can, apply to your strategy and my approach to trading. I give away a lot of gems in this, so the value is definitely up there. Just make sure you like and subscribe if you want more content like this to support the channel. But enjoy the video. Okay. So as of right now, NQ really hasn't done much. It did swipe the previous low. But I personally, right now, I'm just going to tell y'all straight up, I think this is a inducement, and I don't think this is the real swipe at all. So for me, all of this is just liquidity that will be hunted. I don't think this is what they're really trying to do before they buy. If they do buy, that's great. That's fantastic. But yep, I don't believe it. I don't believe it. They did tap into the 4-hour fair value gap during this candle as well. But yeah, I just don't believe that I think that they have a much bigger move down in. But, we'll see. So still waiting on this because this is, at the end of the day, for me, this is not significant. I want to see an actual candle like close. If they can't even do that on the 15-minute, like what are we doing? So due to that fact, can measure from this low to this high as an inversion failure model. We will pay attention to this market at these levels. And basically we're considered something like a TS3. It's no higher time frame fair value gap. So I really not the biggest fan. Fair value gaps on the 3-minute. And we'll just basically look into here. What time did this take place? 8:12. Okay, that's very early. And what we're looking at is for them to come above the macro, which is here. Okay. So I'll be more interested in this. Y'all see this 15-minute over here? There's this untouched 15-minute order block. It could come into play today. So essentially, I don't know what the market's gonna do. Once again, we'll just make that statement. But if there was a trade that I would take maybe around this news that's about to come up, in the event the news spikes up, it's very possible to look at this situation for a trade into here, and then they re-attack these lows that they just left alone. It's a possibility. I don't know what's going to happen at all, but that is a potential trade that I could see happening. I would basically be looking at this as a type of inversion failure model where the market's intention is to go lower, so that this swing from this low to high is actually in the wrong, against the direction of where the market wants to go. And that a prime opportunity would probably fall somewhere between this 382 and 236, preferably the 236 into the untouched 15-minute order block body. As we have had a nice 15-minute engulfing, we did manipulate the original move above this little 15-minute candle, and we have delivered more 15-minute bearish candles. And then for the open, we gave false sales, right? This is a false sale, as they never swept, I would say, on the higher time frame, any internal liquidity. So I'm considering this as like a TS3. So normal correction, Corrective move in the true direction of the market, sharp pullback to take out everybody and their mama, and then real move down, which probably ended up leading to a real move up. Now this is prediction, right? This is a lot of prediction. I don't love it, right? I don't love having to be in that position. But I'm also very comfortable.
Order submitted. Order submitted.
To just place this, and this could get hit, get not hit, become a loss, not become a loss. But I like the risk. I like the risk to reward. So I'll place it there. I like to place trades at what I believe is good levels where the market is exposing itself. So yeah, I have no clue what's going to happen, but with proper risk, you can take anything that is sound and logic. But it's possible they could do the drop without hitting the order. But what I'm going to do is I'm going to place the order where I believe, it has a high probability of hitting. Take a look at YM and ES real quick peeks. They're all trash ranges. YM trash range. But yeah, it looks to me like maybe we'll get more stuff after news. That's what it seems like. They're gonna use news to really put some bass in the market's voice today, because it's not doing much. It's like they really chilled out from what they was doing last week at the end of the week. Really not just the end of the week. They was on that stuff since what, Wednesday, Thursday, and Friday. They start really turning up last week. Okay, we're 5 minutes from the 950 macro as well. But news is doing what I would have anticipated it to be doing. Now, although I don't believe that they swiped deep enough to where I feel like they were really going to go, this trade, by definition, is an inversion failure model. So, like the buy up, by definition, is an inversion failure model. Essentially, it makes an inversion. They spike down below some lows. They push up. They come down below the 236. But if you see here, they push up, and then they tap on the 382 around that same inversion. Okay, right around that same inversion. So that's a great entry here at 942 for a buy into a premium. You can go external, but if you're really sharp with it, probably a 1 to 2.5 is good. But if they are bullish, let's say I'm wrong about the anticipation that they'll respond to this level, you can easily catch like a good 2.5, just even, like I said, to the internal liquidity. But then external, it means obvious 1 to 3 plus, right? And that's even with a smart stop. So this is a stop below the fair value gap that was created. So this is actually pretty valid for inversion failure model here. And like I said, assuming that it were to make it to beyond the high, you got a simple 1 to 3 with all everything lined up for you. So we're sitting here inside this order block. There is a inversion fair value gap in this order block. And if you're wondering why I even considered taking this trade, it's really because of the fact that there's this inversion fair value gap inside the order block. So this is just another thing just based off of probabilities. I really don't, once again, I don't know what's going to happen. My belief is that they didn't get everything they want under here. But I like 15-minute and 5-minute order blocks that will have an inversion inside of them. So we'll see how they behave in this range. But I do see there was a buy opportunity based off the rules to take a buy from this level. Something else to notice, and this is probably where I would say this trade probably won't be successful, is as I teach for the inversion failure model, when we explode past the 618, these are those type of situations where, you know, the market is going to create a fair value gap, passing the 618, the 70%, etc. And essentially, they usually will not come back below the fair value gap that they created. Now, there are times when I've seen this fail because nothing is 100%. So it'd be nice if today would be one of those days. But as of right now, I don't really see that. I feel like right now they're doing it perfectly to be a buy. But once again, just like on my call yesterday, I'm always considering the worst case scenario on all of my trades. I'm never getting into a trade, even with great analysis. I'm always considering that I'm probably wrong. And that keeps me very humble, keeps me from over leveraging, it keeps me from doing really stupid, unnecessary things. But this is a beautiful inversion failure model buy. Even though they didn't like perfectly do a tap on the 236, but the fact that they came and kind of like accumulated off of the 236, that's very nice. The explosion up above the 1 minute order block and fair value gap, and then retap to the 382, perfect, right? The push up above the 618, right? The push up above the 618 and into the premium, very nice. This is a great inversion failure model. The only thing is that because they made this slightly lower low, and that this move here, this order block here on the 15-minute, it did absolutely take out the high of London and some pre-New York highs. And it did not ever get tapped. It did not ever get touched, right? Nor did the 5-minute. And then on the 3-minute, it's literally holding a inversion that has never been rebalanced, meaning I spoke about this last week. Straight push up, straight push down. There's never been a candle that just came and set inside of it or closed inside of it. Well, now we got that. So now we're in a place where a lot of what I expected to happen in both ways has happened, but now they can do go anywhere. So I could be right about the reaction, but still wrong about the trade. Or, you know, if I'm lucky, because guys, I want you to understand, skill to analyze a setup is one thing, but to win the trade is odds, it's luck. It's not a fact. It's not an exact thing. And if you're not comfortable with that, it's going to be tough to win really good, really big trades on a seemingly, you know, algorithmic level. Like, you really want to be able to take a trade right where it's going to happen and see the market completely fall apart. You're going to have to definitely let go of, you know, a lot of expectations around the market. So this is a funky area, but I've seen this before. There's probabilities for both sides, but in the event that we accumulate in this area and end up closing below this candle, and obviously eventually closing below this fair value gap, it's a really great shot at them falling and playing out this trade successfully. But also, there's a day where this exact situation and model ends up playing out to turn into a buy. It's kind of funky, but today I believe that we have a TS3, right? That is the whole point of why I'm taking this trade. It is part of my model. So essentially, we took highs. This is the foundation of all models that I've ever taught. So we took highs, shifted structure, pulled back, correctively went with the trend, and then did a strong internal sweep above those even highs. You take that with the stop above the high, and you target usually at least this low. That's the TS3. It just so happens that there's also an potential inversion failure model at play, and that part of the rules on that is that if they don't, if they fail in this fair value gap, that trade can still be valid. So it's like we're fighting, and I'm not surprised that these two situations are both kind of taking place right here. I'm really not surprised. So, I have a decision to make. I genuinely do have two confirmations happening. This is legitimate. This confirmation here is legitimate in a sense, but then also the TS3 and the reaction from these levels is also legitimate. I genuinely say, you can, if as long as it's not out of ego or fear, should usually just hold the trade that you started with, because you don't want to end up having to switch back and forth multiple times. Allow this trade to be invalidated, right? Essentially, a TS3 is only invalid once they take the high. Okay, so I would allow that in the event that I'm wrong, I would allow it to be invalidated. Maybe they give a pullback and push up to continue, or something else takes place, or you say, you know what, it's not a lot going on in the market that I love right now, so I'm going to wait for something else to take place, right? I'm gonna wait for those alerts to hit. So yeah, not a lot to say on this. It's really at this point just a waiting game. I'm not surprised at how they're maneuvering right now, because they have already kind of showed what they were going to be on in the first place. As you can see, the market was running this play. But I am familiar with them doing a multiple sweep in this situation. Essentially, they look like they're running everything normally, but there's a point where they do this. They drop down, they come into a premium, and then they drop down again. That is very normal of this pattern. It's not 100% though, but if you obviously study enough, you'll know, okay, cool. If that's going to happen, then I'm going to get a certain model. And that is why I teach the TS3 and the inversion failure model, because it's the most simplest way to put all of you in a position to be a master trader, because you're going to know what that signal looks like before it even confirms itself. So as of right now, they're about to fail the inversion failure model. Okay, the moment that this candle closes below here, I don't care how much it goes up and down, they're gonna the inversion failure model will then have failed. A smaller trade on it would have won, but now the when they close, or if they can close right below this level, they will have confirmed a TS3, right? Because I took the early entry. I took the entry that is just based on trading from a good level, from where the market has a high probability of reacting from. That's where I traded from. But there is the timed entry, which is around here at this point, where what the market has just done, where it first made the engulfing, is pulled back, and y'all see all of these bullish candles they just created. Well, when they start closing back below those, you now have a bearish setup. Now it can get funky. There are situations where they come back in here and drop, where they even can come like this and still drop. As of right now, they actually have still not yet fully closed below it, so we got to give that some space. They're actually still in the fair value gap. I'm assuming that they're going to come down, but anything can happen. It's about to get funky for sure. But I do believe that at this point we're probably going towards the TS3 as opposed to finishing the inversion failure model. but you know, anything is possible. There is news at 10, so
Order submitted.
it's gonna be a battle. I would hope that they don't do anything weird at 10 a.m. But you know, we're about to see. Now here goes the last thing that I haven't spoke a lot about, but in the event that you have a TS3 and you believe that you're on that last manipulation wave, that last manipulation wave can be played as an inversion failure model. Essentially, you want them to feel the inversion, and there will be an entry between the 236 and 382 with the stop above that high. So as of right now, 1 minute from news, really we just want to see them do something like this and it should be good to go. But they haven't done it yet, so always very weary at those moments. But right now they did just they printed a bullish candle that it did engulf the last candle, but it's not an engulfing, and they're slapping the 236 while doing that. Normally I would look at that as a potential sell opportunity personally, but let's let the chart show us with some candle closes. But to me, this is given we're faking out for a buy. That's what it's kind of giving me. But we haven't really closed that inversion. We did come into the 50% of it though, which is a good sign. I'm gonna watch from the 5 minute, but obviously the market can explode in any direction it wants at this point. It's shot down. The markets right now are freezing, but it's shot down. So instant win. Y'all see this? So this is the example of how powerful the TS3 is. Now guess what? I can still lose this trade. I can definitely still lose this trade. We just came off of news and a lot can happen in a little bit of time. But I want to show you guys risk to reward for 1 to 3 has already been obtained. Okay, I dragged the the TP pretty far, but I was actually supposed to get on this call and just go for a 1 to 3 with proper risk and be done. It actually would have already hit. It's a lot of moving and back and forth and grooving, but I'm just gonna put stop at break even. But to prove the point, this is nothing's 100%, but I do believe this is still very algorithmic. Like this is the main pattern strategy that I have been using for years now. This is the number one thing that I base my trading strategy off of. Then comes everything else, because this sequence just wins. Okay, but we did get a weird move. They did do some weird stuff. They completely gapped down. They're doing all this weird stuff, but we did feel the inversion while also creating a new gap though. But guess what? Y'all see they just came and tapped the 382. They just tapped the 382. So once again, this trade, even while using the farthest stop loss, right, which is above the highs, already hit 1, 2, 3, which is what our model is designed to do. It's designed to just go for 1 to 3 or 1 to 4, whatever is lined up with the liquidity, preferably. So 1 to 4 would be about right here. And I'm just doing the most because I actually believe that this whole situation is a big manipulation. I feel like they should really kind of dump off and just clear out a lot of buyers. But you know, I don't know what's going to happen, as I always say. So we're about to see. But just understand that the trade was already a W, right? In terms of the model, if I'm journaling, I'm saying, look, if this trade comes back to break even, at the end of the day, look, I should have closed for 1 to 3. Now, because it was news and it was kind of weird, I didn't move my hands, obviously, or what would have helped is just put in the TP at 1 to 3, even if it's just for a partial, because I am using micros. But that would have been enough. But now I will say, at this point, it's a lot the market can do. They can usually in a TS3 you would get the market to actually come below this low, but remember we are in this weird consolidation. This is meant to F people over 100%. 100%. This is meant to give you nightmares. Okay, if you don't know what I know, or what some of the better traders know, it's literally, I mean, they didn't give nobody a chance. Anybody that just bought, I mean, they just got gapped. That's crazy. Anybody that was buying, they just got gapped. And I personally don't think it's done, as it's retap that inversion and hit that 382. But we also still haven't closed back below this 618. So all right, it's 10:03. Usually after those first 3 minutes after the news, we get some real movement. So I'm expecting that the real, whatever's really about to happen in the market should start happening now. Now that we're past those first 3 minutes. So we're about to see what they got going on. Take a look at gold. It's spazzing around that, above that 618 level. So we definitely want this close, obviously back below here. That would be very powerful. And I'm just going on what happens on average. On average for a TS3, the market should usually come below this low. On average, I don't know what's going to happen. As I keep saying, I genuinely don't know. But it is very normal in this situation for the market to come within this range based off of these spaces, right? Usually somewhere at the least between here. It can go a lot farther, but somewhere between here. So I'm just kind of averaging out the probabilities, because everything that we do in trading is based on probabilities. Isn't usually inversion fair value is taken to the 618 or 70% anyway? No. I take it to external, but you can take it to those levels, right? You can take it to those levels and then wait, right? If it gives you a 1 to 3, boom, do it. Let the market figure out what it's going to do. And then if they continue, create that fair value gap past the 618, right? Like, I'll give this an example. It's always slight, but this is it, right? This is a fair value gap. I would actually expect for them not to usually come back above this wick in this situation. But, I've been proven wrong. That's why I actually teach that if you're going to take the 618 play, your stop loss needs to basically kind of go like above the 50% or whatever the case may be. But they're doing a lot right now. But yeah, that's your first target area. Really, even at the 50%, if you're going from the 236, you can go to the 50% if you're doing it very, very like targeted. So like, let's say if you're going from here, stop loss here to the 50%, maybe you go for like a 1 to 2, and then you'll wait for the next opportunity. But usually an inversion failure model is actually, if you're waiting for the best ones, you're trading with the trend, which means you should always be going external. So we just got this big 1 minute bullish candle against the 5 minute bearish candle with the gap. So I'm trying to see what they got going on here. I don't really believe it, but anything can happen, right? Literally anything can happen. I kind of expect for them to completely engulf this back down, but we are now at this very moment, guys, we are now inside of a range, inside of a range, inside of a range, inside of a range. Okay? You got literally the current range they're in, inside of this current range, inside of, well, we're not really inside of this range, but we're by price we're inside of it, but we did earlier expand out of it, but we're currently inside of it while being inside of this one, while being still inside of this one. It's like, if you not trading from either external those ranges or literally from the order block premiums of these ranges, and you're trying to get active on the middle of something like this, it's going to be hell. You gotta be literally really good. But yeah, I've seen this a lot lately, where you get the 5-minute bearish engulfing. It's like so obvious where the market's going, but then on the 1 minute, they'll just literally plug a big bullish candle against that candle, and usually that ends up getting engulfed and destroyed. And that's usually not, I don't want to say usually, but it definitely happens as the 618 play. So although this went above the 618, this for me is the 618 play, as they didn't touch the 50. So it's just really dramatic, because really you'd be working off of this old fair value gap here, but as you can see, they completely still try to close outside of it. But you're not really too much worried about it until they close above here, which is the last swing of bearish candles. So the market's doing its best to be trash today, though, regardless. That is a fact. So this 5-minute candle is about to close in 4 seconds inside of the breaker block here. Right, could be an order block, but more than likely it will probably end up being a breaker block. We'll see. Something that I like to notice is that when we close inside of these candles, you see how they kind of like wick the opening price of it. I usually expect this to fail, but you know, we'll see what they got going on. The markets they surprise me every day. But we're still in this, just holding. They just re-attack that key level. So we'll see if they choose to fail it or somehow explode above it. And that brings into question, is this leg an inversion failure model, right? Right? Could there be an inversion failure model coming off of this leg? And it's really not impossible. I'm just not ready to go against what's already established yet, though. I'd rather take the break even than try to buy this. So, see what they did there. This happens a lot also, like I say, where if you're paying attention, they hit the opening price of the 5-minute order block, but then they also just hit the opening price of the 1-minute order block, which is those last 3 bearish candles, and which also overlaps with the 5-minute one. As you see, they did not close above it on none of these candles. No closes here, no closes here. This is that elite detail that you really gotta stay objective. Some people would look at this and might think that they should close out their sale. This is the benefit of saying very objective. It's like, look, you know what? I'm not even considering stuff until they close above this. And now, you're still in a good trade. Or if it's your day, you just compound it like hell, because obviously key points like these are the best places to expose the market for very tiny risk to reward. Very tiny risk for huge reward. So imagine already being in a 1 to 4, 1 to 5, and then you just use some of that equity and maxed it out for maybe a break even if it hit this. Like this. These are strategies that I would say are more advanced, but literally I was up about, I don't know, what was I up on this trade at that level? $300. I could have maxed out risk on this for a very tight TP. It would have moved my position down, but I could have made it where it was break even at a certain point and increase the risk on this, maybe to get to like 2 contracts, right? 2 contracts on this versus 5 micros. I could have got it to about 2 minis worth of 20 micros. And now the trade will become, like I don't know, what is that? $2,500 trade. I don't know if I'm doing the math really wrong, but something. It'll become nice, right? It'll become really nice. So it's a lot that you can do. This is what I was talking about yesterday. I wish I could just put in you guys' heads how to win in this stuff overnight, but it literally is a process of a lot of experience. And once again, this is coming from a guy that I'm trying to tell y'all, I literally don't know what's going to happen in the market. Yet, everything that's happening right now, from the moment that I hopped on the chart, I said, I don't believe that it's going up and that they're going to take these lows again. Now, that doesn't give me no credit or anything, but it's just the experience of knowing, look, there is a way that the market on average will flow. And then there's also a way that you can approach it to get out of all the mess and just trade it from a higher, I would say literally a higher point of view, which is if you use a TS3 and you use the inversion failure model, you'll be able to avoid a lot of mess, and you'll be able to trade from an objective point of view, because there's just certain things that if they happen a certain way, if you just place certain entries in certain places and place certain stops in certain places, things will go your way. It only gets hard when you try to do what I was just talking about, like really trying to maximize situations, because that's when it gets tough. And I do that because that's how I accelerate results sometimes. But you could literally have this thing on autopilot. TS3 inversion failure model are 2 trading styles that can literally be made autopilot. They do not have to be hard grind. If you do it from a higher time frame and just trade it based off of invalid and valid, you don't have to worry about none of that. So we just closed a bearish 15-minute candle. We are now following a legitimate 15-minute order flow as we bearish, corrective, complete bearish break below 15-minute structure here. They still haven't touched this low. I think that at this point we just hold. I don't know how. Like I said, so it's kind of funny, right? The day when we started, right? When we started this day, we considered that the market should come into these ranges below. Okay. We were sitting on the 50%, which is a corrective level of the market. In reality, should is a strong word. In reality, I could take partials once we swipe these lows and actually kind of hold till at least around the 382. But I'm probably not going to do that. Probably going to take profits earlier, as we are already very around the 1 to 4. And, if I really do like something else, I'll probably take another trade later. But this is coming from the higher standpoint of watching this whole range. Now they're still playing around even in this zone. But once again, we should be following the 15-minute, and we shouldn't be exiting this trade until they at least give us like a 3 to 5 minute true, reversal pattern. Yeah, they're doing all this. They still haven't took the low. They should absolutely expand past this low. What is this? And when I say should, just understand I don't mean that it will happen. When I say should, that genuinely just means like we got a high chance, okay? We got a high chance. It don't mean nothing absolute. Don't let that stuff get to your head. Okay. Now they have done what I would say is the minimum. This right here should be your stop loss. I mean, not stop loss. Your take profit. Okay. Anything extra is, yeah, they can absolutely go and run, but a lot of y'all can't handle what comes after this point. Just being honest. If you already got 1 to 3, 1 to 4, be done. Be done. Because when they go external the range, they absolutely can sometimes still come deep internal and then play out the trade. So
Order canceled.
Living it.
Order filled.
I just took 3 cons off, leaving 2, but not at break even. They will be at around that old level. They can get hit, but I just kind of have the idea from the higher time frame that this could bottom out a little bit more than what I originally was thinking. So, well, actually, it's always what I was thinking. Right?
Order submitted.
It was always what I was thinking, but in terms of where I put my stop. But I was always thinking that they'll probably come into these higher fair value gaps. Now, there is wrong thinking where who says they have to do it now? They could absolutely bounce right off of this inversion and do this later. So, you know, you got to pick your battles. Once again, that target that they just hit there, that was 1 to 4. That is a job well done. That is a great day. And at a high level and at a high clip, that's all you need. People out here on social media talking about negative risk to rewards and 1-to-1s and all this stuff, guys. I'm giving you guys strategies that literally 75% win rate strategies that are giving you 1 to 4. You can achieve anything with that. You just gotta master the psychology behind it, and literally be okay with executing the model, great, but realizing that it could still become a loss, even if you did everything right. If you're not okay with that, then it's going to be difficult. All right, so I'm kind of sick of already watching the market for today. Because this is some slow trash stuff, I'm not gonna lie. But also sometimes the market is slow and trash, and that's just a part of it. So what you got to do is accept that sometimes the market's not going to rush to your TP. It's just not. Sometimes it's going to be tough and difficult. And if you want to trade really good, you need to leave the stop where the trade is invalid and just let it flow, because it does pick up at some point in the day. The market will pick up. It's going to leave a big 1 hour candle at some point that expands back into the range or outside of the range or something. So yeah, kudos to a good Tuesday session. This was pretty sharp.